Hello traders, and welcome to another weekend's market forecast video. Hopefully you had a great weekend so far and you're ready for the next week of trading. And we have started off the month of July last week with the moves as expected. As we said, with the new month, the market should have started moving. We have been expecting the dollar index to start falling from this corrective wedge technical pattern over here. The overall bias was to the downside, and this is what we have been expecting last week from the dollar index, amongst other pairs and other instruments that we have explained. So as you know, we start off with the dollar index. We had an FP on Friday. Now this week we have CPI Thursday, 11th of July. So until then, depending on the price action, we might get some volatility in the market in general. What we can see, at least between Monday and Thursday, is more downside in the dollar index. Perhaps we can open the week lower, but at some moment the market needs to give us some consolidation before it can continue lower later on. So this week is going to be an interesting week because we can see moves in both directions, with the overall bias, generally speaking, is to the downside in the dollar index as of now. But this will be the main view, that we have more downside in the dollar index. But of course, this week, if we open lower, we can expect to see some bounces within CPI before we continue lower later down the line. So you have to keep this in mind if you are trading any specific dollar related pair and so on. So let's move on and see what else we have for this week ahead. For the dollar again, we have been expecting this one from this week of the third week of June to make new highs. This is exactly what we had. And then last week we have explained we expected a turn to the downside for at least a corrective move. Overall, we might still see a little bit more downside. This so far it looks to be corrective, but for us, we are not trading. We don't like to trade dollar yen at this stage. We need to see more price action to determine the next bigger move. So far, what do we see is more downside to take place within at least this pullback for the time being, which it looks like to be incomplete at this stage. For the euro dollar, we have been explaining from these lows that the next bigger move will be to the upside. This is exactly what we got once again. Of course, I would like to just say that if you are not a member, especially in our premium member area, you are missing on 4 daily live sessions between Monday and Thursday. We do live sessions. We cover up the market in more detail. This is nothing that we do here on YouTube. Trade recommendations, we explain which ones have value and which ones they don't. And if you are a serious trader, consider checking us out with the link in the description through BMC page for our membership plans. If you have any questions, you can email us at support@roiforecast.com as well. So for the euro dollar, this was expected. This is exactly what we got. We can overall see a little bit more upside in the short term. It's possible, but soon we should expect at least some degree of a pullback before the trend can continue higher. So for the time being, the trend overall is towards the upside, the bias, but short term, at the moment, very soon, we should start seeing some reaction for a correction. This is not a reversal, but we should be seeing a correction in the market very soon for a pullback, right? Because we cannot go in a straight line. Overall, we still have more upside the way we see the market as of today, but perhaps it might be possible CPI can create some volatility and thus provide a pullback to the market overall. Pound dollar, another one that we have been saying that from these levels, this was the buying area. The market reacted as we have been expecting. Still more upside, at least even with a pullback. This one has at least more upside in the short term before we might consolidate and do a pullback. So still more upside can be seen from this move, which started from this lows over here before we see a pullback. So more upside in general. If you haven't bought from here, you shouldn't trade it. And of course, you can consider becoming a member, because we have been saying in the last 2-3 weeks to our members, all the dollar pairs are ready to react the other way around after they have done a pullback, and we have been expecting these big moves to take place within the month of July. Pound yen, we have got the up move over here after we had some small pullbacks. As we have been saying in the last weeks, the market was still bullish. The way that the market is behaving at the moment, it doesn't give us any signs of a reversal, but still, if it's going to do a move to the downside, it might be something like this, for a pullback, for another move to the upside perhaps, or at least a bounce. So this market soon will be giving us different moves, but at the moment we do not like to trade it. It's definitely getting ready for some degree of a pullback, but at the moment is highly unreliable in terms of trying to do any counter trade whatsoever, especially in this week ahead. This one should be one of the ones to avoid adding any new trades to it. EURUSD, as you have seen, we have been explaining about this downwards trend we have been trading for a while now. Over here, the price action tells us that this is a corrective move. We can still expect new lows to be made towards our target areas down here. But of course, at the moment is not at a stage that if you are new here and you are looking for trades, of course, this is not the time to sell it. We have been explaining this one for a long time. From these highs, and this bounce over here, those was a sell trades in this market. We have a new low below the lows from 2nd of January over here. And soon we will enter at a stage that we can expect some reaction, but we are not there yet. We can overall see more downside. Also, we cannot exclude that this one cannot turn out to be a double correction before another move to the downside, and this is why at the moment any new trades are dangerous, and you should also avoid this one at this stage. For gold, we have also been explaining for a long time about this specific correction in gold, about the structure and what was saying to us overall for the market. We have explained the overall biases to the upside, and buyers should have resumed the upside, and this is exactly what we can see over here. More upside can be seen in the short term, but of course here were the buying areas, not here. You don't buy from here. Here was the buying areas. More upside within this move before we have a small pullback, and then we continue higher. Of course, if you are a new trader, we would recommend and explain to you that you should never try to counter trade a trending market, and trading in pullbacks is very risky. So it's something that you should avoid doing if you want to have long-lasting journey in your trading, because otherwise you would simply be gambling, and this will turn out to be very bad for your account and results overall. So at this moment of time that we have analyzed gold, we are telling that the overall bias is to the upside, and no one should be looking to sell gold, but only looking for buying the dips opportunities such as this one, and this one. And at the end of the day, we are here to provide quality content and to try to help as many traders as possible and give you, let's say, the best overall view. That can help you out in general, but of course, this is not enough what we cover here on YouTube, and that's why we have a service which we cover things in detail, Monday to Thursday daily live sessions, and weekends market overview special video for the members. This is about a 30 to 40 minute long video that we provide to the members every weekend, and we break down the market one by one, including many instruments that we relate together, and we explain what you can expect next. Many things you haven't seen before. This is what I would like to classify that. And also, there is no wonder that we have 100% member retention rate so far in our first 4 months of the service, and soon we will share with you our 4-month trading performance in terms of the specific trade recommendations we share to members. But of course, there is much more beyond that that you get to benefit by being a premium member. Check the link in the description. If you have any questions, send us an email at support@auriforecast.com. So conclusion for gold, more upside short term, soon to give us some pullback. Of course, as I said before, no one can predict the pullbacks, whether they will be deep or flat. So do not attempt to counter trade a trend, because it's very dangerous and you are basically gambling. So overall, more upside in gold can be seen ahead. Now for oil, other than the long-term downtrend that we trade since March 2022, in the short term we have seen a bounce from the 4th of June's lows over here, and we are expecting to see a reaction to the downside first before anything else takes place. We have been explaining about this area over here and how we expected all this move to the downside, and from here we said soon the market will give us a bounce. Of course, the bounce, you cannot predict whether it's a big one or whether it's a small one, and then you continue lower. So what we can see right now, we are going to get some degree of a reaction lower, at least for now. And this one can give us 2 or 3 possibilities before the next move. If you want to figure out what do we see ahead in the future for oil, don't forget to check us out and consider becoming a member if you want to see our views long term for oil and both of the possibilities you can see in the short term. Now for natural gas, we are not posting regularly about natural gas. We have posted about 2-3 weeks ago. We have explained our daily time frame views and how this market will spend and waste a lot of time at the same areas. So we also informed our members with our report. I will show a screenshot on the screen over here so you can see how we predicted the last move to the upside before the pullback. We are reaching at an extreme area of another Fibonacci extension area over here, which soon it might provide us with some reactions. However, these reactions are expected to be tricky, and the market can remain trapped within these areas for some time, and this is something that will not be, let's say, suitable for shorter term traders. And we have also explained in the weekly time frame about this investment area in natural gas for the next few years. This was investment area, not trading area. It's a very big difference when you have investment area and when you have trading areas. This is completely different story. So what we can see ahead in gas is a lot of choppiness can take place in the weeks to come ahead. So it's going to be not suitable for trading overall, I would say. And because we also have some data analysis that we do, which most of you don't have access to, we can overall see what do we have in terms of position interest and what is the overall bias there. So in our view, this market can remain controlled, so they can try to keep the prices under control for some extended period of time for the time being, something similar that we have experienced over here before when we had this range over here between February 2023 into September. We can experience something similar over here right now. So this is our views for gas. Quick update also for Bitcoin, because we haven't included that in the last week. We don't really see a reason why to include something every week when we don't really expect anything major to take place, of course. The market was somewhere here. We have explained the 2 possibilities, and one of them was to see another move to the downside, which is exactly what we had, which overall completes a 1, 2, 3 swing pullback in this case. And we do have an area down here which we are expecting buying accumulation to take place and the market from here to provide a reaction. Of course, if you are interested for our longer term views in Bitcoin and the area that we see below and what we see ahead, I will not disclose much in this video because we do have the service that we provide that. So feel free to become a member, specifically a premium member if you are serious. So you will get all the details and our daily live sessions Monday to Thursday with the recording as well. So you will know exactly what do we see ahead and why do we see something specific, because one thing is to anticipate something and another reason is to know why to anticipate something. We explain everything, we connect the dots, and we present to you the full, let's say, filtered analysis that we do, so you know exactly what to expect and why. Because if you don't know why, you're just gambling and you don't know how to do proper risk management. Whether you are an investor or a trader, anything that you are, you need to know what could come ahead of time and why. And this is how you always stay ahead of the game. Now for the SPX, S&P 500 cash index, we have been explaining from here a small pullback can be seen. As you can see, the pullback was very small, and this is why we are saying, and we try to protect any newbie traders, do not try to counter trade a specific trend, because the pullbacks, you don't know how big they are going to be, and this is why you should never trade against the bigger direction of the market. So the market made the new highs as it was expected anyway, which is something that we are explaining to our members. Basically, what do we see ahead of time for the indices, and we explain to them specific cycles and what do we see in terms of pullbacks and many other things that we don't really cover here. So for us it was expected to continue trading to the upside anyway. So overall, we can still see a little bit more upside short term, but like I said, this week CPI on Thursday, we don't really have much data so far to see what can take place. Of course, the members will be informed on Wednesday's live session, what we can see based on the price action and what we can expect, but this will be short-term volatility. We do not see yet any reason of any bigger pullback in the indices. However, soon we might see something, but still this is an incomplete sequence for us, and they should see a little bit more upside, at least for the short term. We cannot deny the possibilities of CPI's pullback. This is also a possibility, but then overall we still believe that the market should find support and trade one more time to the upside at least. And this is our general bias for the SPX S&P 500 cash index. And of course, concluding our video with two ETFs, the 3Qs and the GDX. So from the 3Qs, I have here circled the target area, which we have presented to our members during Mondays and Tuesdays live sessions. We have explained that if it breaks to the upside, this will be the target area. The 1.236 to 1618 Fibonacci inverse Fibonacci retracement of this pullback, the target has been reached, and from here soon we can expect to see a pullback. We cannot deny the fact of another high. Small pullback and another high is very likely. And then we might see a pullback later down the line overall. But like we said, this is a bullish market, and nobody should be attempting to counter trade this market, at least at the moment. So this is our view overall. And for the GDX, the gold miners ETF, we have got the move to the upside as we have been expecting. This was a buying area. Now, the way the market has closed over here, after a very small pullback, another high should follow, and soon we might get a pullback before we continue to the upside again. And this will be our view as well for the GDX, the gold miners ETF. And with that note, guys, thank you so much for watching another weekend's market forecast video for the week ahead. Don't forget to subscribe if you are new here. Leave us a like. It's very important for us. Leave us a like so the YouTube algorithm can push our content to more people and traders so everyone can benefit and at the same time become better in terms of investment decisions and trading. And we will probably see you maybe during the midweek for a midweek video. Other than that, we wish you a great rest of your weekend and good trading week, and we'll see you in the next video.